This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Hope all of you had a fantastic weekend. Start of a new week. Markets, of course, are going to be the focus. We're coming to you, as always, from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning. And so much this week, right? There's the US Fed meeting. There are auto sales that are going to happen this week. There's a remainder of the earnings season. And it is a truncated week, so we have a holiday midweek. So lots to talk about.
Well, that's right. Lots of action in the stock markets. And what about the heat, guys? Very, very hot, right? I mean, yesterday I was in, I'd moved out of Mumbai, went to Karjat, went to Pune. It's so hot. I mean, and May is still not here. So yeah. I think we're bracing for a blitzering May, I guess so.
It's a cruel summer. I was told there's a song by that name.
We'll figure that.
Swifties like it.
Really? I'm not a Swiftie. I'm too old to be a Swiftie, actually.
Neither, but you know, you're around kids and you hear all kinds of stuff. But anyway, it is a hot summer, a cruel one, maybe even. Well, let's just quickly tell you what you like to sort of, what you need to know actually as you start another week, start another day, right? And you basically have... we'll start where we left off on Friday, and especially from Wall Street, because that's essentially the handover. You basically had a good handover from Wall Street, and I'll tell you why. You had equities which went up, yields which were lower, and all of this was backed, or rather was on the back of core PCE number, which came in line with expectations. It was not soft, it was not weak. But it was in line with expectations. And the reason why the markets took it with both hands, because the last two inflation prints which came in, both of them were actually above expectations. So the market was actually bracing in for an ugly surprise once again. It was not ugly, it was not weak, it was in line, and the market took it in a bit more positive kind of a way. So yields went down. The 10-year lost about 4 basis points or so. And as a result, you saw the bigger move coming in on Nasdaq as compared to the S&P. The Nasdaq was up about 2%. The S&P was up only half of that, about 1% or so. Now, the dollar index, it is back above the 106 levels, so almost a 0.5% move. And that's pretty large, right, for that one. Big move in the USD JPY currency cross. Yen continues to go lower and lower and lower. I mean, you know, it's basically past that pair is past the 158. Actually, it's this morning, it's on your screen. It's past the 159 levels. At what level will you see the Bank of Japan coming in and sort of intervening? That is something which we will need to wait and watch. But, I mean, you had the Bank of Japan meeting last week, late last week, and nothing came out of it. And that has basically triggered another large move on the downside for it. Oil prices, they stay a little above $89 a barrel, but, you know, it's basically between this range, 87 on the downside, 91, 92 on the upside that we had recently. FOMC is the main event this week. I mean, if you're looking for a big market-moving event, it's that one. The Fed will meet on Wednesday. Wednesday, by the way, is a market holiday here. Doesn't matter, I mean, because the decision is, will react to the decision any which way on Thursday morning. But no change is expected. So will we see something on the margin? We don't know. But at the headline level, in terms of rates, policy, all of that, nothing really is expected. And perhaps it's going to be a consensus kind of a call. Now, support for the Nifty, just to sort of tie all of this back into levels. On Friday, we got a bit of a sell-off from the highs, right? So the support, I'll start there, stands at about 22,403. It's exactly where we left off on Friday. That's a 20-day moving average, but that did not break. So that kind of is the first pivot. Below that, and I think that is a more meaningful one, is the 40-day exponential average, which stands at 22,240. I mean, that is about 200 points away from where we are. The high of 22,620 will be the line, will be the first resistance level. This is, last Friday's high. For the Nifty Bank, supports come in again at the 20-day moving average, which, by the way, is 47,937. We left off at 48,201. So, again, pretty close by, 1.5% or so, and you're there. And on the way up, the Nifty Bank targets this area between 49,057 and 49,100. So, I mean, both these are in the vicinity of 1.5 to 2.5%, both on the downside and on the upside as well. It's a big gap up this morning, at least that's the indication, about 90 points higher. And some of it, I'm assuming, is sort of in reaction to some of the earnings we got over the weekend. And we'll talk more about that as we go along. It's looked good. The markets showed us that it wants to go up more than anything else. You get these intermittent kind of pullbacks. But what it's also not been able to do for the last, I think, many weeks now is that once it gets to the higher bound of the range, which is 22,550, 22,600, it once again starts to cool off a little bit. It's not been able to take that out decisively. And this morning, with the GIFT Nifty indicating a start at about 22,645, you're once again in that zone. So we'll see once we start. Sonia.
Oh, absolutely. I mean, there's so much to track today, right? And looks like the bulls have the upper hand. So the GIFT Nifty is up almost about 90 odd points. So let's take it straight to some of the large cap names. ICICI Bank's numbers will go down quite well with the street. The numbers beat street estimates, and the deposit growth was very healthy, 20%. The loan growth was about 16 odd percent. And Jefferies put out a note where they said that ICICI Bank remains the top pick in the sector for them. So lots of bullish views coming in on ICICI Bank post its numbers. So keep that on your radar. The other heavyweight is Maruti. Of course, the numbers are below street estimates, so you could see some, red tinge over there. But by and large, most brokerages are saying that the margins were under a bit of pressure. Gross margins were down because the product mix was a bit weaker this time, lower amount of CNG sales. But by and large, the trend is still on the upside. So I won't be surprised if there's some buying interest in Maruti after the dip that we've seen. Remember, the stock has had a dream run in the last 12 months or so. Apart from that, I think on the flip side, you have HCL Tech, where the margins were very disappointing. It was not just a disappointing quarter for them, but the guidance was something that, won't go down well with the street at all. The FY25 revenue guidance was 3 to 5%, but the poll was 5 to 7%. So that's going to definitely take a back seat this morning. So these are some of the large numbers that you'd want to react to today. Overall, for the index, I think the trend is still on the upside. Yes, we are facing a bit of resistance at the 22,600 mark, but this has been an out-and-out buy-on-dips market, and there's no reason to suggest otherwise. So, the trend is your friend, as they say, and the uptrend seems to be intact. A couple of things to watch out for. The US markets were very strong on Friday. The Dow was up 150 points. The S&P 500 saw its best week since November. And this week, of course, there's the US Fed meeting, as Prashant was pointing out, so all eyes will be on that. For our own markets this week, two triggers. In terms of earnings, you have lots of, non-index, large caps, mid-cap favorites that are reporting numbers. There's Exide, Dabur, CEAT. There is Adani Power that reports numbers as well, so keep an eye out on that. And then you have auto sales too for the month of April. And of course, auto stocks have been everyone's favorite. So lots to watch out for.
Well, that's right. It's going to be a stock-specific market, Sonia. But as you said, yes, I think the Nifty's uptrend is still very much intact. But we're finding some kind of resistance at around the 22,700 odd mark. So that's one cue. The other factor we're looking at is the FI net short positions. Well, they have moved up again to around 1 lakh contracts. And the big cue for this week is going to be what the Fed is going to do. But let's get to the domestic cues first. In Friday's trading session, yes, the Nifty Bank, both of them ended a little bit lower. But I wouldn't be too worried. But actually, there was unwinding of long positions. We typically see this. If there's a big move on the last day of the previous series, on the first day of the new series, you see some of that get pulled back. And, you're returning back to the mean, basically. So no big worry with regard to the fall that we saw on Friday. What did the FIIs do? Well, they are now net short, close to around 65% of their positions on the short side. And the short positioning went up by around 68,000 contracts. So the swing factor out there, because longs were 22,000 contracts, is around 40,000 contracts. So from being net short to the tune of close to around 60,000 contracts approximately, now they've moved back to around 1 lakh contracts. I'll tell you what, I would have wished that, in fact, the GIFT Nifty was suggesting that we're going to start off on the back foot. If that was the case, then that gives you that reason to go ahead and buy with the FI's net short. The problem today is a little bit more tricky because the GIFT Nifty is suggesting a 90-point uptick. So let's see how that goes. What are the levels we're looking at? Well, the reference point on the downside will be the 20 as well as the 50 DMA. So that's going to be the important marks on the downside. On the upside, and the reason I say that the upside, the 22,700 call could be the resistance level, is because the 22,500 call, it saw a fair bit of open interest. The premium was roughly around 180 to 200 rupees, which has come down to around 126 rupees. So the resistance is 22,700. The support is 20 as well as the 50 DMA. Those levels come up for you on the screen. The Nifty Bank, I think that could be a bigger mover in today's trading session because it's come down closer to around its support zone of around the 20 DMA. It's been facing resistance at around that 48,500 odd mark. So I think the Nifty Bank could be a relative outperformer for today's trading session. I'm looking at two stocks because the regulators were in action over the weekend, both the RBI as well as SEBI. And the stock that I'm looking at is AU Small Finance Bank because the RBI has issued the guidelines for voluntary transition from a small finance bank to a universal bank. So it ticks, all the boxes with regard to that. So AU Small Finance Bank is the one to track. Maybe it takes place in the next few years, but it's a sentiment positive. So it opens up to the green. What happens from there is what we need to see. And the second one I'm looking at is BSE. Remember, it's been the out-and-out performer in this market, but SEBI has directed them to pay higher regulatory fee on derivatives on the basis of notional turnover. So that's what could result in some EPS pullbacks. So that one starts off in the red. Let's see what happens from there. Two stocks, AU Small Finance Bank as well as BSE.
All right, thanks a lot for that. So plenty of stocks to talk about this morning and to react to. Let's get you some money market views. First up, B. Prasanna of ICICI Bank says the dollar remains strong as the Q1 GDP and March core PCE data in the US pointed towards persistent price pressure leading to delayed rate cut expectations. He says the dovish Bank of Japan also triggered a sell-off in the Japanese yen, resulting in weak Asian currencies. He says the rupee, backed by better macros and RBI's healthy reserves, outperformed its Asian peers, and rising crude dollar and geopolitical tensions will keep the rupee under pressure in the short term. Expects the dollar INR to trade in a range of 83.25 to 83.75 this week.
All right, on bonds, we've got B. Prasanna, who says that global yields remained under pressure as re-inflationary concerns gained momentum along with robust growth data. He says domestic macros, however, continue to exhibit benign inflation outlook, resulting in constructive price action. He expects the market to consolidate, with the 10-year benchmark bond yield likely to be in a range of between 7.15 to 7.25%.
Well, we've got a lot of stock-specific action track for you. Get to that in just a bit in our special Top 10 segment. For the time being, we're running through the list. We're looking at ICICI Bank, SBI Life, L&T Finance, NMDC, AU Small Finance Bank. All of them will be reacting to positive news flow. And we're split down the middle today. 5 expected to open up in the green, 5 in the red. So let's run you through the stocks that are reacting to negative news flow. Apollo Hospitals, Maruti Suzuki, HCL Tech, SBI Card, and IDFC First Bank.